Government has released a new back series GDP data that has handed out some pretty drastic cuts to growths achieved under the previous UPA regimes. Now, the Vice Chairman of the NITI Aayog, Rajiv Kumar, along with Chief Statistician Praveen Srivastava, said that the new series has made, and I quote, some significant methodological improvements. They also added that the formula applied is internationally comparable and in sync with the UN system of standard accounts. Now, here's how the picture has changed between fiscal year 2006 to 2012. Growth rates have been revised lower for every single year. The sharpest cut has been handed to FY11, where the revised GDP stands at 8.5% against the old series growth rate of 10.3%. So in essence, average growth rate in these 7 years was over 8% according to the old series, and that has now been revised lower to below 7%. We're now joined by the Vice Chairman of NITI Aayog, Rajiv Kumar. Mr. Kumar, appreciate you joining us here on CNBC TV 18. Let me start by asking you, how is this report different from the report that was put forward in July by the MEPI, that's the Ministry of Statistics and Planning, authored by Sudipto Mundell? You explained in your press conference that these reports are not comparable. But if you could give us more color on why these two reports are not comparable, because they have a very different outcome. One, which is the Mundell Committee report, suggests that the average growth during the UPA era was in excess of 8%, whereas data presented today by the NITI Aayog and the CSO shows a completely different picture. It shows that the average is well under 7%. How do you explain this?
We were at pains to explain at the press conference that what the CSO has done with this, with all the trouble that they've taken over the last 2 years and a bit, is to recalibrate the entire economy based on not just the 11-12 prices, but also on entirely new set of sources of data, new coverage, new sectors being covered, new methodology being applied. For example, they have now used CPI for different sectors rather than use the aggregate CPI. They've got the MCA data, up to 10, and then using it, combining it with the SI data, etc., etc. The essential point is that this exercise is a recalibration of economic activity for the years from 2004-5 to 2011-12. Now, what the Mundell Committee had done was to say that in the base year 2011-12, they looked at the level of the GDP for the two series, one based on 2004-5 and the other based on 2011-12, and said that the one based on 11-12 is 3 lakh crore higher than the previous one, and they distributed it equally to all the previous years, on the assumption that GDP growth rate can only change gradually, and so do prices, and therefore it's easy therefore it's justified for them to distribute it equally across the years. Now, that simply is an econometric exercise. That simply is a sort of is like a guess estimate, which is why what they came up with is what they came up with, but it's not comparable at all to what the CSO has done, which is, as I said to you, recalibrate the entire economy based on methodology which is much closer to the UN system of national accounts 2008.
Okay, again, for the benefit of our audience, sir, thank you for explaining that to us. I want to get a little bit more detail on how these two reports are different, because, you pointed out saying that the Mundell Committee seemed to have taken the easy way out, and the series data that's been put out today by the CSO has access to much more sort of exhaustive data, for instance, the MCA data and so on and so forth, and it's in compliance or it's aligned to global standards. So can you explain to us, was it a case of inappropriate use of price deflators? I mean, what was the issue exactly with the Mundell report versus what we've seen today?
No, Sheeren, I hope you'll understand that I'm not here to discuss the Mundell Committee report. And, and they did the best that they could.
No, I understand, sir.
With whatever data they had. But the fact is that they did not have the access to all the data that the CSO has had now, and which they have now used with with painstaking effort. So please don't push me on or expect me to answer what they did and why they did it.
If I just look at the FY11 data, because that is where we've seen a almost 180 basis point drop from 10.3% in the old series to 8.5% in the new series. Can you explain to us what would lead to such a sharp fall? And I go back again again to what I heard you say in your press conference, that, for instance, there was a gross overestimation, or so it seems, in the trade sector in the previous series versus this series. So can you explain to us how this 180 basis point drop can be explained, for instance, just using the FY11 number?
Yeah. Yeah. So there is, as you would notice, a approximate 1.7% drop in the new series, for the previous years, and that's in some sense an admission by the CSO of having overestimated the tertiary sector growth. And the tertiary sector growth, as a result of which, if you look at the new data, the tertiary sector growth rate is is significantly lower, and the share of the tertiary sector in the growth for every year is about 1.5 to 2% lower, the share, for each year, and therefore the share in the GDP of the tertiary sector has also come down. Now, there's a whole table there which gives in great detail, all the changes that you've noticed in the tertiary sector, but three sectors stand out, which is informal trade, telecommunications, and financial services. All the mining-related service activities were earlier estimated just simply by approximating it to the growth in the mining output. The value of the mining output. That, as you know, went through a yo-yo because of the iron ore prices, etc. And all of that was then extrapolated to estimating the, trade services, the mining data, the growth of services related to the mining sector. All of that has been re-estimated using far more superior, methodology, better data, and also sector-specific WPI and CPI, as a result of which the tertiary sector growth rate has come down for those years, and the result is there for you to see.
If we take a look now at the average GDP growth rate between FY06 to FY12, according to the new series, it's about 6%. FY14 to FY18, about 7.3%. If I take a look at the EPS growth rates between FY06 and FY12, between 20 to 25%. FY14 to FY18 at 4%. Similarly, if we take a look at the loan growth between FY6 to FY12, loan growth of about 25, almost 20 to 30%, and between FY14 to FY18, it's 10%. So how do you then make sense of that?
The new series uses the enterprise approach and therefore uses the balance sheet data released for about, I think, 500,000 companies by the Ministry of Corporate Affairs. The earlier set was much smaller, and that earlier set was being much smaller actually just looked at a very small set and not the entire set that you have. And now we have done, we are now capturing the much bigger set where the performance is, much more varied than for the top few 100 companies that the earlier series had been able to capture. And that is what there is in front of you.
Two questions, sir, and these were observations that were made a short while ago on my show by the two former CSOs, Dr. T.C. Anant and Dr. Pranab Sen. And the point that Dr. Anant made was that he believes that one of the surprises that this data shows up is that perhaps India was not as decoupled from the global financial crisis as one assumed or estimated it was. That to him was one of the big revelations as far as today's data was concerned. Would you agree?
I think I agree, and I think, in fact, I had been saying even at that time that this story that is being put out, that we are unique and we are decoupled, etc., is not true, because I had seen that this was, and despite the fact that we tried our best by boosting up public expenditure and fiscal deficit numbers in 2009-10, in fiscal 2009 and fiscal 2010, we weren't able to get the growth that we thought we did. I think now there is evidence to show that the global crisis did affect us. And we took time to come out of it, and then there has been a, and so it is best to recognize henceforth that India is not in a sui generis space, but it is a part of the global economy to which we should pay much more attention than what we have been doing so far.
The other observation that came in from Dr. Pranab Sen, Mr. Kumar, was that why did the Niti Aayog present this data and not leave it to the CSO, which has traditionally been the case? He fears that this will in fact lead to politicization of the new series.
No, it's not that at all. But as I mentioned to you, there have been 2 rounds of very serious, rigorous discussion which were organized by the Niti Aayog of all the experts that we could get together. There were 10 experts that we had brought. They had 2 rounds of discussion on this. And because it was a Niti Aayog on that platform that this was done, it was thought best for Niti Aayog to discuss this data, because we also realized that there will be a large number of sort of analytical and broader political economy and and political and economic questions, which will be best for, I suppose, a body like Niti Aayog to answer. It is not just a technical thing that we are talking about here, and which is why Niti Aayog was considered to be a better platform to release this back series than the CSO. Doesn't take away anything from the technical competence or the technical hard work done by the CSO.
Let me end then by asking you, sir, we've got quarterly numbers being reported on the 30th of November, and there are concerns being expressed by government on the fact that the current liquidity squeeze, especially when it comes to sectoral NBFCs, that is going to challenge growth in general and consumption growth in particular. What's your own sense, and how do you see that impacting growth?
Sheeren, the first thing is that the numbers that will come out on the 30th will relate to Q2, which ends in September. Yeah, if I'm right, yes, it does end in September. So the NBFC scenario doesn't affect that so much. But therefore, it's for me a cause of worry, and I've been pointing this out publicly and in private and in the government, that we have to take care of the credit squeeze that is being faced by the NBFC sector. It is not good enough to say that the NBFCs are being able to tidy over their asset requirements, etc. The important thing is that the NBFC sector is now currently unable to extend credit for the consumer durables and the retail sector that it had done in the past. In the past 5 years, the NBFC assets under NBFC management quadrupled to compensate for the lack of credit growth in the banking sector. Now, at the current moment, the NBFC sector is having to shrink its balance sheet, because its commercial paper is not being often rolled over without having to, put in the portfolio, the asset portfolio, to both the banks or to the, mostly to the banks. So I am worried. But that worry that I have is more for the Q3 and Q4 than for Q2, which number is going to come out. Which number is going to come out, as you said, on the 30th of November.
So just on that, you said that you're worried about Q3 and Q4 and not necessarily Q2 because the NBFC scare happened post-September. But, the Reserve Bank put out a statement yesterday saying very categorically that it doesn't believe that there is a liquidity issue, that credit growth is at a 5-year high. So there seems to continue to be this disconnect between how the government views the situation and how the Reserve Bank does.
I don't want to get into the government versus RBI, but I have to say that the 12% rate of growth of credit, commercial bank credit, comes off a very low base in the previous month. Also, if you see, a large part of that growth is because of their extending the credit to the NBFC sector, and the fact is that the banking sector, as I just mentioned earlier to you, is only is just a part, not a small, but is a part of the total capital sector and financial sector, and which meets the requirements of the economy. And the NBFC sector is important here. So we need to talk about credit growth for the entire financial sector.
Okay, Mr. Kumar, let me ask you, sir, you said that you fear that growth will be impacted in Q3 and Q4. What is the estimation that you're working with? How much could we see growth being shaved off on account of what we're seeing happen today?
No. I'm not saying it will be impacted. I said that's my worry because of what's happened in the post-ILFS scenario. Now there is still time. Q3 is not come to an end. There are other things which happen. Oil prices have dropped. That will be a fillip to the growth rate. But I said simply, so don't get me wrong, I said that the credit squeeze on the NBFC sector is a cause of worry for me for the growth going forward. Now there are compensatory factors to it. As I said, I mentioned one of them. There could be others. So therefore I'm not sure. I'm not saying that the Q3, Q4 numbers are going to be lower. I'm merely saying that we need to take account of what's happening in the NBFC sector and take measures to address that, to make sure that our growth momentum continues as it has done in the past 5 quarters.
Do you discredit the Mundell committee? Do you disregard it? Do you disassociate yourself from it? I mean, what becomes of that report?
I leave that to very smart people like you to take your own decisions, Sheeren. Far from me to say anything about it.
All right. Mr. Kumar, always a pleasure. Appreciate you joining us here on CNBC TV 18. Well, that was the GDP back series data, but a quick look of all the action on the Lal Street. The Sensex and the Nifty continued their up move led by a handful of large caps, but mid-caps sulked in trade. The Nifty managing to end above the 10,700 mark, led by Reliance and IT stocks, while the Sensex rallied about 200 points. The Bank Nifty ended flat with a positive bias dragged lower by Yes Bank, which crashed 10% in trade. Mid-caps underperformed as well. The index lost about 1% in trade. That was the market action for today, but the big market voice, Rhythm Desai of Morgan Stanley, expects solid earnings growth in the next few quarters. Speaking exclusively to CNBC TV 18, he said that growth is already picking up and India is heading towards the start of a new earnings cycle. So far, has eluded us. Is this the beginning?
Growth in India is picking up. We have seen that for now several quarters. Revenue growth is putting successive highs. We're at a 4-year high on revenue growth for the quarter that just ended, and I think revenue growth is accelerating further in this quarter. But I think now we have come to that moment where the headline earnings growth for the Nifty or the Sensex, I think will really show some robust numbers, led largely by domestic companies and corporate banks. So we should be ready for some really solid earnings growth in the coming quarters.
Well, the bullish Rhythm Desai there. But the other story that we're tracking tonight, the financial crunch surrounding non-bank financial companies, housing companies in specific, is beginning to hit the real estate sector hard. Earlier this week, the yield on the dollar-denominated bonds issued by Lodha developers rose to 23%. This in turn tripped stocks of companies like Piramal Enterprises who have lent to Lodha. Earlier today, we spoke with Abhishek Lodha, who clarified that there are no defaults and that the surge in yields were entirely because of very thin volumes. But the market continues to be worried. We'll come to that interview in just a bit. But let's go across to Manisha Natarajan now. Manisha, clearly the worst doesn't seem to be over for the real estate sector yet. At least that seems to be the sentiment in the market.
Well, the worst is not yet over, and that's what all the experts who've come on the channel have said. And the impact is still to come on both the NBFCs with large real estate exposure and also on the home buyers, developers as well. Over 4.5 lakh units have already been delayed as per first half of 2018. 1687 projects are delayed between 2 to 8 years. That number is likely to cross 2,000. So the home buyers are staring at a pretty bleak future. Now, lending for realty firms from NBFCs has slowed down substantially, but more than that, that's a known fact. The cost of funds has gone up by 200 basis points. This is going to break the back of the industry, especially the smaller developers with huge debts and not enough rental yields backing those assets. Lenders are now pressurizing developers to sell A-grade assets. Now, how many A-grade assets are there in everybody's books? Not everyone is a Lodha who can sell off 2 London properties. One BKC by Radius has been put on the block. Supertech has put 3 hotels on sale. Lenders, I believe, are also pushing developers to cut prices of premium and luxury homes at least. I don't know whether there is room, but that's also, we are hearing, is likely to happen. But most importantly, it's not just wholesale lending. Retail lending has slowed down, and that's going to impact the markets in a big way. Housing finance, if it slows down, is a larger issue for the sector as a whole.
Manisha, thanks very much for joining us with that. As I mentioned, we spoke with Abhishek Lodha of Lodha Developers, and he says that the company is well funded, has never delayed or defaulted on any debt. He also dismisses the concerns surrounding the surge in Lodha's dollar-denominated bond yields. Take a look.
This is a modest size $325 million USD bond issued in 2015, maturing in 2020. This is not listed on any exchange. It's an OTC bond and has very small volumes. For example, the volume in the last 3 months is less than $5 million. So clearly there is no price discovery happening here. Almost everybody holds it to maturity. This bond regularly moves around in pricing. It moves around, it has in the last 24 months been between 85 and 109 on a regular basis. So quite frankly, this pricing has no relevance to the substance. And if you look at a pricing of 89 or 90, what does it tell you? Does it say default? Because default bonds don't trade at 89, 90. Default bonds trade at 20, 30, 50.
Do you worry that rating agencies may look at this yield?
See, our rating was reaffirmed as little as, I think, a month and a half ago by the international rating agencies. And again, to reiterate the fact, what SEBI has said about bond yields is where there is price discovery for market-listed bonds.
Okay.
This is not a market-listed bond.
Fair point.
The test of the pudding is it being serviced or is there any delay or default? And not only is the question with this particular bond, but you can check with any of our lenders, big lenders, small lenders, whatever. We are prepaid with most of our big lenders for up to a year, up to November, December 2019. And there hasn't been, let alone default, even a day of delay with any servicing. And we continue to be able to access funds from the market. We sit on ample liquidity. And you may have heard this morning, we are in a part of a process where we will be raising almost 5,000 crores from a series of transactions over the next few weeks. Okay. So as a business, we're in a very good space.
The sale of properties is in London.
So Lodha Developers, which is the development company that we have in India, is selling its equity interest in the London properties and will receive about 4,200 odd crores depending on the exchange rate for that sale.
What are your plans with regards to your IPO? It's been delayed?
The IPO, as you're aware, currently the Indian markets are not conducive, not just us. There has been no IPO which has realistically happened in the last few months. We expect that there will be a window to do the IPO either before the general elections or after the general elections.
Well, that was Abhishek Lodha, cnbc TV 18 exclusive. And on to the other big exclusive newsmaker today. Differences over technology transfer led to the breakdown in talks between Hindustan Aeronautics and Rafael jet maker Dassault. That's the word in from the new chairman and managing director of HAL, R. Madhavan. He spoke with my colleague Rituparna Bhuyan on the Rafael controversy and rubbished reports that pricing issues had led to the stagnation of the deal. Take a look.
One issue that has been raised by some foreign OEMs like Dassault, and I spoke to the CEO Eric Trappier just about a month back. What he said is that HAL and Dassault were engaged in talks regarding a work share agreement, and while doing that, they could not take the agreement forward because the kind of price that was quoted per aircraft by HAL was high, and B, the man hours that are needed are quite high. Now these are issues that are being raised by a foreign OEM with whom you have already executed past projects. We wanted to understand from you the HAL side of the story.
See, the cost consists of two parts. Basically the material cost, the labor cost is the other one. Material cost, if it is kept high, the labor content is not very big a content in that. So we should look at the final cost, how it is built up. When you say that man hours are high, you cannot compare a 100th aircraft being produced versus a new aircraft, the first aircraft to be produced. We call it a learning curve. So generally the learning curve has a margin of 79 to 80%. We give as a first aircraft where the learning is timings are higher. Then as you continue to produce the aircrafts, then the time comes down.
Right.
So by the 50th aircraft, you somehow reach, will be at the same level as anybody else. In fact, if you look at the Su-30, we are at a level which is lower than the Russian ours even now. So that means we are much more efficient there. So initially, when you ask for the first aircraft timings, that is your man hours, it will definitely be higher, because you cannot compare the first one versus what is the 100th one that he is producing. So yes, there is a difference. And also look at it that my man hour rates are much lower than the international rates, because in India the rates are lesser.
Right.
It is lesser. So the total cost of man against the man hour or the labor is lower.
Right. So as you are saying that the man hour rates are low, but in that specific case you quoted a man hour which is 2.7 times more.
It's not 2.7 times. I don't know how you got that figure, but it is definitely 170 to 180% in the first aircraft. It is a standard that we follow.
And hence you could not give a guarantee?
And it will keep on, no, it is not that. So it will keep on coming down as you increase the number of aircraft that you are producing. The main point that HAL raised in that was the depth of technology that was being transferred. So we didn't want, and the depth of technology was held with the other OEMs along with Dassault. Basically Thales and Snecma. So those depth of technology is what we wanted, because making the structures was not a problem. So that is where we had some issues.
So you were saying that actually it was a technology transfer which led to more problems rather than man hours and cost price per
And then of course it is that we should not discuss on that any further, but we left it at that point of time. But then suddenly the change in this one came, so we dropped.
So there was no work share agreement was not there.
I was not there, so work share agreement I don't know about.
But before I move on to the other issues, do you think that as you were saying, your issues were related to something totally different, but could such issues could it have been sorted out? And I'm asking this because you will be in the future engaging with many of these OEMs for future contracts. My question to you is, can such issues, or could that issue in that case of particular case of Dassault, could it have been sorted out?
That's a hypothetical question. I don't think I will be able to answer that, because those who are handling that at that point of time should be better positioned to say that.
Okay.
And it's a closed chapter for us, so I didn't break it up and open out the issues at that point of time.
And you have always maintained that you are not into the business of offsets, right?
Yeah.
But why not? I mean, won't it add to your revenue stream?
No, it is not that we don't do offsets at all. There are some offsets which come in our area of work. That's what I've been telling, that if it is related to aircraft manufacture or design, we are ready to take those offsets. But the thing is, if it is not related to my area of work, offsets can happen across a large this one. If it's not in my area of work, I will not be.
So you are not going to actively pursue offsets?
No, it's not my basic area where I will be looking at.
Right.
My job is to make aircrafts.
Okay.
Well, from one exclusive to the other, the big corporate story. Naresh Goyal is open to relinquishing a significant stake in Jet Airways, the airline he founded more than 25 years ago. CNBC TV 18 learns that Goyal is currently in talks with 3 prospective buyers to raise money for Jet. That's not all. We also learn from sources that Etihad has identified a local partner outside of its current equation with Jet and Naresh Goyal to pick up a stake to comply with the FDI norms. Because remember, for foreign airlines, the FDI cap is 49%. Kritika Saxena joins us now with the details. Kritika, what are you picking up?
Well, Naresh Goyal, the promoter of Jet Airways, who holds 51% stake in the company, was earlier looking at bringing in a minority investor to infuse fresh capital into the company. He wasn't earlier looking at a dilution of his stake of that 51%. However, after conversation with strategic investors, we understand that he is now willing to let go of a significant stake and go beyond that 51%. So the talks with 3 investors are now going to go to the next level. He has told investors that $1 billion is required. He wants to do what's best for the company, but he wants to retain a minority stake and hold a board seat. Now, as far as conversation with these players is concerned, we've already told you about Tata. They want to take a controlling stake and merge it with Vistara. Etihad, we understand, is in talks with a local partner. They've already identified a local partner to come on board and help them make this deal. So after the deal does, if the deal does go through, Etihad will hike their stake from 24% to 49% within the permissible FDI limit and bring in a local partner. Just to quickly reiterate over here, as per the FDI FDI norms, substantial ownership and effective control continues to be vested in Indian nationals, and that's the norm. If control over here is defined as the right to appoint majority of directors or to control the management or policy decisions included by virtue of shareholding or management rights or shareholder agreements or voting rights. So a local partner coming on board is going to make the entire process simpler. And the third player, that is Air France, KLM and Delta, will also have to do the same if they have to see the deal go through. The conversation with the last consortium is still at a preliminary stage, so we need to watch out to see how this progresses. But we learned that Feb is the timeline that Jet has given to themselves to be able to close a deal over here, and iBankers are working on exactly that.
Today was a big day for political parties in the state of Madhya Pradesh as the state voted for the next government. Now, MP has been under the BJP rule for 3 straight terms. The single-phase elections for 230 seats has been a fiercely fought battle between the BJP and the Congress. The voters will be deciding the fate of over 2,900 candidates. The state has recorded a voter turnout of nearly 75% till 6 p.m. Let's go across to Manoj Sharma, who joins us from Bhopal. Manoj, polling day, election day, big stakes involved for both the BJP and the Congress. What are you picking up?
Well, now everybody is waiting for December 11 for the counting day, because fate of number of bigwigs of the BJP and the Congress, it has been sealed in electronic voting machine in the polling which has been done in 230 constituencies in Madhya Pradesh today. And Shivraj Singh Chauhan, Chief Minister of MP, he is pitted against former Union Minister Arun Yadav from Budni, and number of stalwarts of the Congress like Digvijay Singh, his son Jayavardhan Singh is contesting from Raghugarh, his brother Lakshman Singh is contesting from Chachoda, and his nephew Privrat Singh is contesting from Khilchipur. So these are the relatives of Digvijay Singh who are in the fray in this election. And also a leader of opposition Ajay Singh is contesting from Churhat, his traditional seat. So everybody is now waiting for December 11. And as far as issues are concerned, there were a number of issues which have been raised by the Congress and the BJP. Like the Congress was raising misrule, misgovernance of the 15 years of BJP regime, and while on the other hand, the Shivraj Singh Chauhan was counting on, what he has done, his government has done during the past 15 years, like Ladli Lakshmi, like Sambal Yojana, like waiver of the power and electricity bills in the state. So these are the issues, and Prime Minister Narendra Modi, he was in fact lamenting why the Congress was, dragging names of his parents in this election. So these are the issues. Yogi Adityanath, he came to Madhya Pradesh and he also raised issue of Ram Temple, construction of Ram Temple in Ayodhya. But apart from these national issues, local issues were very important in this election, and also contestant. So contestant of the BJP and the Congress, and also local issues. These are the keys to this election in the state.
Well, a key battle, this one, in the run-up to the 2019 Lok Sabha elections. Psephologists are pointing at anti-incumbency after 3 straight terms for the BJP. The BJP, on its part, is pointing at what it is calling a pro-incumbency sentiment that is likely to bring them back to power for a 4th straight time. The votes have been cast. Results are now, of course, awaited. But it was not Madhya Pradesh alone. The state of Mizoram as well went for the elections today. The state saw a voter turnout of 75% till 5 p.m. Congress has been in power in this state for the last 10 years and had won 34 seats out of the total 40 seats in the 2013 assembly elections. However, the lone Congress bastion in the northeast has seen decline in its vote share since 2014. My colleague from Network 18 brought us the latest details. Take a look.
We have just concluded a very peaceful election here in Mizoram, where 209 candidates will be fighting for 40 seats. It is a very critical election this time. Since Mizoram gained statehood from the year 1987 till now, only 2 parties have been ruling, MNF and Congress, but now we see the entrance of new parties such as Zoram People's Movement and BJP, who are very confident on forming a government in this state. The total number of voters in Mizoram is 7.7 lakhs, and the number of polling booths set up was 1,179. As per the last reports received, the voter turnout is around 73%, but the final reports are yet yet to be compiled. While the voting time was set to be from 7 a.m. till 4 p.m., it has been going on and is probably going on till now because the voter turnout is larger than expected. A lot of youth have come out, and it seems to be that the youth are more aware of their government and are very intent on making sure that there is a change in their governance. This is Kimi Colney reporting for News 18 Assam Northeast with camera person Zotan Sanga from Aizawl, Mizoram.
So clearly key battles these, but keep in mind that this is just the first leg of the semi-final, so to speak, before the 2019 Lok Sabha elections. Keep in mind that the Rajasthan as well as the Chhattisgarh elections are still due. That's where we can expect more clarity on the mood and the sentiment of the nation going forward. Let's shift focus now. Pakistan Prime Minister Imran Khan today laid the foundation stone for the Kartarpur corridor today with Union Ministers Harsimrat Kaur Badal, Hardeep Singh Puri and Congress legislator Navjot Singh Sidhu in attendance. Now the corridor will link Gurudwara Darbar Sahib, the final resting place of Guru Nanak Dev in Pakistan, to Dera Baba Nanak Gurudwara in Gurdaspur.
इस करतारपुर लांघे के खुलने के साथ जब बर्लिन की दीवार गिर सकती है तो फिर हिंदुस्तान और पाकिस्तान की नफरत को आप गिरा सकते हैं और यहां से एक नई शुरुआत बाबा नानक के नाम पे आप चला सकते हैं, जिस बाबा नानक ने कहा ना कोई हिंदू ना कोई मुसलमान लेकिन एक ओंकार।
दोनों सरकारों को यह एहसास होना चाहिए कि हमें आगे बढ़ना चाहिए। ये बॉर्डर अगर खुलेंगे, पंजाब मेल चलती थी, मेरे पिता मुझे कहा करते थे पंजाब मेल चलती थी और लाहौर में आके रुक जाती थी, वो लाहौर से आगे पेशावर जा सकती है, पेशावर से आगे अफगानिस्तान जा सकती है, मॉस्को जा सकती है।
मुसलमान मदीना से 4 किलोमीटर दूर एक बॉर्डर के बाहर खड़े और मदीना जा नहीं सकते, और उनको अगर मदीना जाने का मौका मिल जाए तो वो जो उनको खुशी मिलेगी वो आज मैं आपकी शक्लों पे खुशी देख रहा हूं।
Well, even as the ministers from the Indian cabinet attended the ground-laying ceremony of the Kartarpur corridor, External Affairs Minister Sushma Swaraj clarified that the bilateral dialogues and Kartarpur corridor are two separate issues. She said that India will not attend the SAARC summit in Pakistan, despite Pakistan initiating the Kartarpur corridor project.
That for the last 20 years, rather many years, Government of India has been asking for this Kartarpur corridor, and for the first time, Pakistan responded positively to this. But that doesn't mean that the bilateral dialogue will start only on this. The bilateral dialogue, we always say, terror and talks can't go together. So that invitation has already been given. But we are not responding to it positively because, as I said, that unless and until Pakistan stops terrorist activities in India, there will be no dialogue and we will not participate in SAARC.
Well, the Delhi High Court today upheld the conviction of 88 people in the 1984 anti-Sikh riot case, asking all of them to surrender. They were sentenced to 5 years in jail for rioting, burning houses and curfew violations in East Delhi's Trilokpuri area. Now, the convicts had challenged the August 27, 1996 judgment of a sessions court. Several of the convicts have died during the pendency of this case. Now, as the countdown for 2019 general elections begins, the Modi government is likely to go as per the tradition and present a vote on account in 2019 instead of a full budget. Sapna Das is joining us with more details. Sapna, for the benefit of our viewers, this time around, there will not be a full-fledged budget. Instead, there will be a vote on account. Decode that for us.
Well, we are clearly given to understand that most likely it's going to be a vote on account. That's what the government seems to be preparing for as per convention. And the convention always has been that it's an interim budget or a vote on account in an election year. Having said that, what this would really mean is that the government will seek the parliament's nod for 4 months of expenditure, April, May, June, July, for the new financial year. Although the revenue and the expenditure estimates are always done for the full fiscal. So that does not change. But what changes is the appropriation bill will be for 4 months, which will allow the government to seek the parliaments not to, draw the funds from the Consolidated Fund of India and do the expenditure for 4 months till a full government or a new government comes into place. Having said that, the other thing we need to keep in mind is that in terms of new announcements or any future roadmap for reform, that's completely a political call. But nothing prevents the government from, announcing schemes, and it's not necessary that you have to come out with an immediate expenditure outlay for that. For example, the Ayushman Bharat can be kept in mind. The announcement came in this financial year in the finance minister's budget speech, but it took some time for the government to kind of, explain the expenditure outlay, and even that has not been fully outlined so far, in the current year's budget. So something may come forward on that front. So that's an example that I'm just giving. So nothing prevents the government from making these announcements, but that's again a political call. Last but not the least, no direct tax changes. What the finance bill will basically seek is a continuation of the existing direct tax laws. So no changes there. Continuation till the full budget is presented sometime in July. And last but not the least, also in terms of your indirect tax changes, well, they can be done at any point in time, but it's only the customs part which remains purely with the central government. The rest of the things have been given over to the GST Council.
Well, thanks a lot, Sapna, for that. Now, in a setback for the Tamil Nadu government, a panel constituted by the National Green Tribunal, or the NGT, has called the closure of Sterlite's copper plant in Tuticorin unjustified. Now, the committee headed by former Meghalaya High Court Chief Justice Tarun Agarwal told the NGT that the shutdown is not sustainable as it is against the principles of natural justice. No opportunity for a hearing was given to Vedanta. That's the assessment of this committee. The NGT has now asked the report to be given to councils for Tamil Nadu as well as to the Central Pollution Control Board. The matter is now listed for consideration on 7th of December. Well, in other news, and what comes as a big blow for Vedanta, the Delhi High Court today has trashed a petition by the company seeking to export excess crude from its Rajasthan oil fields. Vedanta, meanwhile, keep in mind, had urged before the Apex Court that they should be allowed to export excess crude oil crude oil, given that there is no law that bars such a move. They also argued that as per the trade agreement, the trade policies that are currently in place, there is no bar on Vedanta from exporting crude oil. They even went to the extent of saying that they are forced to sell at discounted price to domestic refiners and that is causing them big losses despite the huge investments that they have made. The government stance, however, was very clear. They opposed Vedanta's application tooth and nail. The government stance was clear. They argued that India is an oil-deficient country and any such move will put the national interest at stake, and that is unacceptable. Now, that seems to be an argument that the Delhi High Court appears to have bitten into. The Delhi High Court has dismissed Vedanta's application, clearly holding that there is no merit in Vedanta's plea. But is this the end of the road? Clearly not. This is an order. This is a judgment that has been passed by the Delhi High Court division bench. What we are picking up from sources is that Vedanta, aggrieved by this order, is likely to challenge it by way of an SLP or a special leave petition before the Supreme Court. So essentially, Vedanta, a setback today at the hands of the Delhi High Court, but they will be knocking on the doors of the Supreme Court soon. With that, let's shift focus now. The big story from the FMCG space. CNBC TV18 learns that global giant Unilever has pipped rival Nestle in the race for GSK Consumer Healthcare, which is the owner of the prize brand Horlicks. Now, Nisha Podar is joining us with those exclusive details. Nisha, what else are you picking up?
It has been a high-intensity battle to buy out brands like Horlicks, Boost under GSK Consumer Healthcare in India, $4 billion transaction, and many global majors have fought it out here. But now with sources with direct knowledge share with CNBC TV18 that Unilever could turn out to be the clear winner. We do gather that it has pipped Nestle and has entered into exclusive talks, which is very advanced in nature. And if all goes well, the announcement of Unilever buying out GSK Consumer Healthcare could be really coming in soon. Now, what we do gather is that Unilever at the last moment had made an aggressive move to sweeten the proposal and really clinch this transaction. Earlier, Unilever had offered a share transaction by merging GSK Consumer Healthcare with HUL, but that was pitted against Nestle's all-cash deal. So now we do gather that Unilever could be offering to buy out GSK Group Group and take over GSK Consumer Healthcare along with the Bangladesh business and Horlicks and Boost businesses in 20 other countries across Asia as well as Middle East along with brand, and later on after the transaction is complete to go ahead with a merger with HUL. See, from the seller's side, the lucrative deal would always be an all-cash deal because they first don't want to stay for a long haul period for the merger process to be completed, and on the other hand, at the end of it, get shares instead of hard cash. So this is the transaction that we are looking at. Of course, it's an advanced stage and announcement is likely very soon.
Well, thanks a lot, Nisha, for those details. Now, from the FMCG space to the aviation space, the Airports Authority of India has issued a notice to SpiceJet for non-payment of dues. Now, the dues, which are in relation to landing and parking fees, have exceeded the security deposit given by the airline. Anu Sharma, who broke that story earlier for us, has sent us this report.
So the aviation sector continues to remain under stress. Sources have told us that the Airports Authority of India has issued a notice to SpiceJet for non-payment of dues amounting to around 117 crore rupees. The airline security deposit with the Airports Authority of India is around 104 crore rupees, and clearly that the dues have exceeded the security deposit limit. Sources have told us that the airline has been asked to submit an amount of around 20 crore rupees before 30th of November, and the airline has also been asked to submit an amount of around 2.5 crore rupees on a daily basis. Now, this is not the first time that airlines have not been able to pay 100% of their dues in one go to AAI. In the past also, such instances have taken place because the sector is already reeling under stress due to low fare levels, steep fuel prices and also weak currency. Now, again, the Airports Authority of India may look at raising this daily limit of 2.5 crore rupees to 3.5 crore rupees if SpiceJet is not able to pay 20 crore rupees by November 30th. In a response to our query, SpiceJet has said that payments to Airports Authority of India and other vendors are being made as per schedule, and it remains firmly committed to all its obligation. Now, it remains to be seen whether the airline does pay that amount of 20 crore rupees and whether it gets back on track to deposit all its dues on a timely basis. Back to you.
Quick look now at Wall Street. U.S. equities are trading in the green ahead of Fed Chair Jerome Powell's speech. The Dow is up by nearly 200 points. Powell is slated to talk about the Fed's framework for monitoring financial stability. Investors are eagerly awaiting the speech as the stocks have fallen on fears that the central bank may be tightening monetary policy too quickly. Well, back home, the National Company Law Tribunal's Ahmedabad bench took up SR Steel's insolvency case today. Ritu Singh is joining us with the details of today's proceedings. Ritu, what essentially transpired in the court today?
Well, the Ahmedabad bench of the NCLT today heard the SR Steel Creditors Committee and promoter SR Steel Asia Holdings plea in the corporate insolvency case of the debt-ridden steelmaker. Now, Ravi Kadam, who was arguing on behalf of the Committee of Creditors, said that the COC had already approved the sale of SR Steel to ArcelorMittal, which has made an offer of 42,000 crore rupees. And he argued that New Metal, which had Revant Roya from the promoter family of SR Group in the consortium, had failed to comply with Supreme Court's orders by not clearing the dues of the SR Group within the time stipulated by the Supreme Court. Further, he argued that the unofficial offer of 54,000 crore rupees that is being made by the Royas to withdraw SR Steel from insolvency proceedings was simply not maintainable and therefore sought to dismiss their petition. But Mihir Joshi, arguing on behalf of the SR Steel promoters, countered Ravi Kadam, saying that ArcelorMittal's offer for the company was not really reflective of the true value of SR Steel. He argued that the mere initiation of insolvency proceedings cannot mean that negotiation process has to stop. And he said that the Roya's offer to settle the debt, which was sent to the lenders in a letter on the 25th of October, never really got a response, and the Committee of Creditors was acting in haste by taking up the ArcelorMittal offer when the Royas have offered a higher sum of money. And he said that the lenders must, in the end, accept that offer which gives them the maximum revenue. Now, the case for now has been adjourned until the 10th of December.
Well, on to the big story now from the M&A space. We learned from sources that Amazon has agreed to buy up to 9.5% stake in Future Retail. The share purchase agreement may also include a call option, which will allow Amazon to raise stake in the company later. The negotiations are learnt to be in the final stages. Priya Seth, who broke that story, is joining us with the details. Priya Seth, again, what are the details that you're picking up as of right now? And tell us more about this call option, which is a part, we understand, of the share purchase agreement.
Well, the Future Retail Amazon deal has entered its last lap. In fact, we understand from sources that Amazon has agreed to purchase up to 9.5% stake in Future Retail. Do remember that at this point in time, Amazon can buy only up to 10% stake in Future Retail through the FPI route, but Amazon is eyeing options to increase the stake at a later date, and for that, the company may look at including a call option as a part of their overall share purchase agreement. Now, for Amazon to include this call option, the company is negotiating as far as a call premium is concerned. So this means that Amazon may have to pay a 20 to 25% higher price determined by the SEBI formula for preferential allotment, and if that happens, the deal value could soar and could be in the range of about 3,200 to 3,500 crore rupees if the call option is included as a part of this share purchase agreement. So at this point in time, negotiations are still underway, but we do understand that the deal is likely to be signed in December. In fact, we did reach out to both the parties concerned. Future Retail did not respond to our query, while Amazon said that they do not have any comments to offer as far as our query is concerned.